Hello, everyone. This is Richard Wolff, and today I want to talk directly to you about the 2026 Cost of Living Adjustment, or COLA, update. I want you to listen carefully because this is important for anyone receiving Social Security, SSI, or even if you're planning for retirement. These changes are going to impact your monthly checks, your taxes, and the amount you're allowed to earn if you're still working. So understanding this fully can save you money, stress, and headaches down the line. Let's start by talking about COLA itself. COLA is designed to make sure that your Social Security benefits keep pace with inflation. Every year, the government looks at the rise in the cost of living and adjusts benefits accordingly. For 2026, the preliminary figures suggest a noticeable increase in COLA, which is good news for retirees because it means that your purchasing power won't erode as prices for groceries, medical expenses, housing, and other essentials rise. But here's the catch. While COLA increases your benefits, it also has ripple effects that can change your tax situation and affect your overall income strategy. Now, I want to be very clear about taxes. Many people think that Social Security benefits are automatically tax-free, but that's not the case. In 2026, the thresholds for taxation on Social Security are changing, which means that some people who previously did not pay taxes on their benefits could see a larger portion of their income taxed, depending on your total income from other sources. Up to 50% or even 85% of your Social Security benefits could become taxable. That may sound alarming, but understanding this ahead of time allows you to plan your finances more effectively. Don't wait until tax season to figure this out. Calculate your total expected income for the year, including wages, pensions, retirement account withdrawals, and Social Security, and then estimate how much of your benefit will be taxed. This proactive step is crucial. I also want to talk about earning limits. If you're under full retirement age and still working, you need to know how much you can earn before your Social Security benefits are reduced. For 2026, these limits have been adjusted upward to reflect inflation. This is very important because it allows you to continue earning a reasonable income without facing penalties or reductions. For example, if last year the earning limit was $21,000, in 2026, this limit will be higher, giving you more flexibility to work and supplement your retirement income. Many retirees don't realize that staying informed about these limits can mean the difference between getting a full benefit and losing hundreds or even thousands of dollars each year. Let's break this down further. Imagine you're still working part-time and receiving Social Security benefits. Before 2026, you may have had to worry about losing a portion of your benefits if your income exceeded the threshold. Now, with the updated limit, you can earn more without facing a reduction. That's a significant change, and it can impact your budget, your lifestyle, and even your retirement plans. It's essential to calculate carefully, but this is an opportunity, not a restriction. Another area I want to emphasize is how COLA interacts with taxation. This is something that can easily be overlooked. When your benefits increase due to COLA, that increase counts as income. Depending on your total income for the year, this could push you into a higher tax bracket, meaning that while you're receiving more money, you could also owe more in federal taxes. That's why planning is so important. Understanding the interaction between your COLA increase and your total taxable income can help you avoid surprises and manage your money effectively. Now let's consider couples. Many couples receive Social Security together, and the taxation rules can affect them differently than a single individual. If both spouses are receiving benefits, their combined income could push them over the tax threshold, meaning a larger portion of their benefits could be taxed. This is another reason why couples should plan carefully, ideally sitting down with a financial advisor or tax professional to understand how the 2026 updates specifically affect their situation. Knowing this ahead of time allows for better decision-making about when to claim benefits, how much to withdraw from other accounts, and how to maximize overall income. I also want to talk about retirees who are receiving other benefits, like SSI or VA benefits. These benefits sometimes depend on your total income, which now includes the COLA increase. An increase in Social Security can affect your eligibility or the amount of other benefits you receive. This is why understanding the full picture is so critical. By looking at all sources of income together, you can ensure that you are not unintentionally reducing benefits elsewhere. It's all about strategic planning and being proactive. Let's also talk about timing. The 2026 COLA increase will be applied starting in January, which means that planning should start in December or even earlier. If you wait until the new year, you may miss opportunities to adjust withholding, manage distributions, or make other financial decisions that could save you money. Timing is everything when it comes to Social Security and retirement planning. Understanding the schedule and taking action early allows you to maximize benefits and minimize tax liability. I want to emphasize something very important here. The increase in COLA is designed to help retirees cope with inflation. But inflation isn't just a number on paper. It affects every part of your life, from grocery bills to healthcare costs, utility bills, and transportation. The 2026 COLA increase is a response to these rising costs. However, because of taxation and other adjustments, the net increase you receive may not be as large as the gross increase suggests. This is why planning ahead and understanding exactly how these updates affect your personal situation is critical. For those of you who are still working, I want to be very clear. The updated earning limits mean that you can continue earning income without facing reductions in your Social Security. This is particularly important for those who rely on continued earnings to maintain their lifestyle or to cover unexpected expenses. Knowing your limits, keeping track of your earnings, and planning strategically can make a huge difference. Remember, this is about control and making informed choices. I also want to point out that the way Social Security interacts with taxes, benefits, and other income sources can be complex. But it doesn't have to be confusing. By staying informed, by understanding these updates, and by consulting with professionals when needed, you can navigate these changes successfully. This is what financial security in retirement looks like. Being proactive rather than reactive. Let's discuss a few strategies. One strategy many retirees are considering is delaying benefits until reaching full retirement age. By doing this, you can increase your monthly benefit and potentially reduce the impact of taxation. Another strategy is adjusting withdrawals from retirement accounts or pension plans to optimize income and tax liability. For example, if you withdraw too much from a 401k or IRA early in the year, it could push you into a higher tax bracket and increase taxes on your Social Security benefits. Careful planning can help you avoid this. I also want to talk about couples again because it's a very common scenario. For couples, claiming strategies can be complicated but extremely beneficial. For instance, if one spouse is younger and delaying benefits, While the other claims early, the combination can maximize lifetime income and minimize taxes. Understanding the COLA impact in this context is key to ensuring that both spouses benefit optimally from the 2026 increase. Another important point is the indirect effect of COLA increases on other government benefits. For those receiving SSI, for example, an increase in Social Security income could reduce eligibility or monthly payments. Similarly, veterans receiving VA benefits may experience changes depending on how total income is calculated. This is why comprehensive planning is so important. Looking at all sources of income and benefits together ensures that you're making the most of what you receive. I want to stress the importance of taking action now. The 2026 COLA increase is coming, and with it, new earning limits and tax rules. Waiting until the last minute could mean missed opportunities. Check your income, understand your tax situation, review your retirement accounts, and make adjustments if necessary. This proactive approach ensures that the COLA increase benefits you as much as possible and minimizes any negative consequences. In addition, staying informed each year is critical. These adjustments are not a one-time event. They happen annually based on inflation and economic conditions. The government reviews COLA, taxes, and earning limits regularly to keep pace with changes in the economy. Staying updated ensures that your retirement planning is always on track and that you're not caught off guard by new adjustments. Let's also think about the practical side of this. The increase in COLA, while helpful, may not fully cover rising costs in all areas, especially health care, which tends to increase faster than general inflation. This means that while your benefit increase will help, it's essential to plan carefully, budget wisely, and consider supplemental income or savings to cover any gaps. Understanding how COLA, taxes, and earning limits work together allows you to create a realistic financial plan for 2026 and beyond. Finally, I want to leave you with this. These changes are manageable, and with the right knowledge, you can make them work for you. Understanding the 2026 COLA update, the new taxes, and the updated earning limits is the first step. Planning your withdrawals, timing your benefits, and being proactive with taxes is the second step. By doing this, you ensure that you receive the maximum benefit possible while minimizing taxes and maintaining financial stability. So take a moment to review your current Social Security statements, calculate your expected income for 2026, and consider the impact of these changes. Use this knowledge to make strategic decisions that maximize your benefits. Remember, knowledge is power, and in this case, it can also save you money. The 2026 COLA update is an opportunity, but only if you understand it and take action. Stay informed, plan ahead, and make 2026 a year where your Social Security benefits work for you, not against you. This is Richard Wolff, bringing you clear, actionable guidance to navigate these important changes, and I urge you to use this information to secure your financial future.